Learning about investing is a lot like riding a bike. At first it may seem intimidating or complicated. Dangers seem to be everywhere. That's why it's important to learn the basics, in ways you can learn to minimize risk and protect yourself. After a good amount of practice and learning, you can take the training wheels off and start really learning to ride along the way. The roads may change, there will be good days and there will be bad days. While learning to ride doesn't guarantee a spot in Tour de France, riding a bike would get you where you want a little faster. Let's look at the basic and start with one of the most common investments, stocks. When you purchase a stock, you're buying a piece or a share of the company. By owning a share, you own a small fraction of the company's asset and a claim on its future earnings. There are two ways you can make money by investing in stocks. The first is through stock appreciation. When a stock you own goes up in value, if the investor bought the stock at one price and it went up, the investor could then make money by selling the stock to another investor at the higher price. The second way is through a dividend. This is a periodic payment issued by some stocks. A dividend is a way for the company to give a portion of its earnings to shareholders. Suppose there is a company called MR Cycling. This company makes bikes, really good bikes. The bikes are so good that the factory wants to expand so it can sell more bikes to people around the world. To do this, the company needs to raise more money, also known as capital. There are a few ways the company could go about doing this. 1. Take out a loan, but this would mean that significant amount of debt or issue shares of stocks. By issuing stock, which is called going public, the company can raise money without going into debt. Instead, it sells shares of ownership and claim on the future owning to investors. So let's meet a typical investor. Our investor is one who has little extra cash. He's looking for an investment that has the potential to offer better returns than savings account, and is willing to accept the higher risk of investing in stock. He thinks MR Cycling is a promising company that's likely to grow. Because of this, he thinks buying a share would be a good investment. So how much does a share really cost? Suppose a company decides to raise $1 million and decide to issue 1,000 shares of stock. Because each share represents a fraction of the company's worth, there are 1,000 shares. Each share represents 1,000 of MR Cycling. Because the company is raising $1 million at initial public offering or IPO, each share would value at $1,000. Let's say the price doesn't change after IPO. So our investor purchases a single share on the open market through his broker for $1,000. Now let's see what could happen to his investment. If the company does well and profits increase, the value of the company is likely to go up. As a result, the stock price may increase as well. Assuming the price of the stock goes up, our investor could now turn a profit by selling some of his shares to another investor in the stock market. However, if the company's venture doesn't go as planned, its value could decrease and so could the price of the stock. If this happens, our investor could lose money if he decides to sell at the current price. When it comes down to investing in the stock market, the basic goal is to buy when the prices are low and sell when the prices are high. But stocks in the stock market doesn't always go up. Sometimes they stay the same and sometimes they go down. And sometimes prices change really quickly. Because of this, stocks are considered riskier than historically safer investments such as bonds or CDFs. However, investors keep coming back to the stock market. Why? Because with this increased risk comes with increased potential for greater returns. Savvy investors take precautions to try and minimize risk, like creating an investment plan, adding diversity to their portfolios by investing in a variety of companies, and putting money in other investments besides stocks, and learning trading strategies for up and down sideways market. Now you know some basic about investing in stocks. That's just the beginning. Be sure to subscribe and turn on post notifications so you won't miss other educational videos when I post them.